Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Monday, the 27th of August, 2018, and we're right now about 4:15 p.m. Central Daylight Time. Good news. The U.S. has finally done a deal. Yeah, it's got to be ratified and all, but it's a deal. And the deal with Mexico is positive in that I believe once you do one deal, it sends out a message in the marketplace. The U.S. is open for business, and as much as we want and demand, there's a certain give and take. Take a look at the sunset clause. We're going to a 6-year period, and it's not an automatic expiration. It's a review. Very different than what we were told originally. But there's give and take, and that's it. Now, in the metal markets, for the very first time, we're getting what we call, and it's a long time, upside price counts in the gold market and the silver market. So unless we take out these most recent lows, something is changing. Notice how on the announcement of the deal, the dollar's down and most currencies are up. So the world seems to like the fact that the U.S. isn't going to beat down the other currencies at this point with what is going on. I applaud that fact. If we go to the gold chart and we take a look at what's coming out, from the 1161.40 break low, the market's back to 1209. So this market has rallied approximately $43. Okay, that's important as I see it. You're still in a down thrust because of the way the patterns are setting up, but that can change. If you'll recall on my charts last Thursday on the daily, I had a downtrend line going just through here. It's no longer in place. That got thrown out on Friday, and today that's the confirmation that you have something else at work. You have this up channel at work. Important to me is the price count. A price count formation is this formation. This break low, a rally high, you break, don't break through the previous low here, and you take off. Because it came at the low of a move, it's very important. And until you take out this 1189 area, I think traders will think, and I'm not saying they're right or wrong, I think they'll think a trade bottom is trying to set into the gold market. What's even more important to me is it's taking place over the 18-day average of closes. So it's not a market that's going to rally up to the 18-day average necessarily and run into a brick wall. That's not to say the market might not back and fill. I would be surprised if it didn't. But the market for the first time in a long time is in an uptrend with upside bias, and a target is the 1233.40 level, and 1238.90 right in that zone is the price count area, and I'll talk about the price counts in a minute with you. But this is important, as is the momentum, which is up. Admittedly, it's overbought. You've had 2 days of large gains. You were up today $270, and you were up $19 on Friday. So you've got a $22 rally that maybe the market wants to backtrack a bit on. What would bother me immensely is taking out this 1189.30 level. Now on GLD, look at how it came alive. This is what the chart looked like last Thursday. Then we had that rally which set up higher lows, higher highs, and it followed through today. So until we take out this 112 area, here too we have a price count to the upside, putting into play at least the upper Bollinger Band. Again, an overbought market. Then we come over to GDX, and these are the gold miners. Well, the miners actually back here throughout their first warning signal last Wednesday. You lost the embedded reading. When you lose an embedded reading, and an embedded reading is that the K and D lines, these two lines that make up the slow stochastic, are going sideways under 20. When that stops, only the next day can it be gained back, which would have been Thursday. It didn't, or did it? It did. Now what? Look at Friday. The market takes off, loses it again. Now you've got lost momentum to the downside. When they do them back to back like that, a problem, and today it confirms it. So you cannot go back and get that embedded reading without both numbers going back under 20 for several days in a row now. That puts into play with the higher lows, higher highs, upward momentum, downside bias, and a target of 1969. If you take a look at the gold-silver ratio, it went to its highest high. If we come right back here last Thursday, it's backed off a little bit, but it's not a sign yet that the metals have really bottomed out. If you think that this ratio often breaks down as metals start to rally higher, and the rationale there in the past had been that we get more industrial demand, it kicks up copper, gold, silver, all those type of metals. In the silver market, the market got high enough today at $14.99.5 to take out a previous high. You have a lower low, so you don't have a trend. You've had a market that's just oversold and trying to grind higher, and that's why the picture here isn't as pretty as gold. It still has resistance at the 1509.70 level. The copper market, on the other hand, has higher lows, higher highs. It had a sideways action right through this. The market breaks out right about here to the downside, and all of a sudden gets back into the Bollinger Bands and stops riding them. You've hit it each day, but now you're starting to climb away from them. There you keep going. Then from this break low that didn't take out this one, and this is August 23rd, the market comes up and on Friday settles at 270.230 over the 18-day average, which now gives you a pattern of higher lows, higher highs, momentum trying to turn up, and you get a small further rally today. If the market hangs in here, so be it. It probably turns the Bollinger Band sideways. What this market still needs is good information from elsewhere, namely the U.S. and China. I don't see that coming anywhere soon in these markets. I think the U.S. and Canada stand a good chance of getting a deal done sooner rather than later now that Mexico's in the picture. Then Europe. Last will be China. Higher lows, higher highs, rallies up to approximately the 18-day average, stalls out, momentum up, markets waiting for a close over that 18-day average to say all systems go to the upside. And as I kept telling you, I thought the strongest of all the markets has been the Palladium, and up to the upper Bollinger Band, the only metal to do it, the 100-day average knocking on the door, and now you're getting pretty extreme. I'm expecting sooner this profit taking to start setting in. Maybe it's where the platinum catches up a little bit to it. In the dollar index, even with today's good news, the dollar down. People aren't buying it. We're not bulling the world. Now we're looking for what? We're looking for better things for our economy via a dollar not running away to the upside, via a Fed that last week said that there's still going to be more increases, but they're moderate, so to speak, and a market that's in a downtrend trying to target the 94.28 level. We're getting close and we're oversold. I'm not saying that I think there's going to be a lot of pressing on the downside in the dollar, which probably benefits a little bit the metals because I don't see a lot of upside either. Now, this is the pattern gold had, and I wish I could stop this and I can't. But you come up, back off, and it's almost a flip-flop of this. You're up, you're down, you come up, you don't take out a previous high, and you start falling. It's the flip-flop that's happening right now in the gold market. And it and silver have thrown out those upside counts. That doesn't mean it has to go higher, but go to your December gold, look at this pattern, and you'll see that the market's trying to establish that. That's what I'm getting after. And it gives you an idea where the market might go. We tonight have sent out to our mailing list the upside price counts already on the gold market. We might do the silver tomorrow. To get onto this list, call us. You can go to our website, www.iraepstein.com. You can click up here if you're watching me on YouTube, and you'll be able to get right onto the form, sign up. We'll get you there. Today we sent out the Mexican peso in the morning. Now it's the gold. Have a good day.